Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing some longer-term technical analysis on Bitcoin, because in today's video, I need to show you guys a pattern that is going to be playing out just a couple of days before Halloween, and it makes sense that it's playing out just a couple of days before Halloween this year, because it is relatively scary for the Bitcoin and the cryptocurrency market. This is a pattern that's only played out a couple of times in the history of Bitcoin, and every time it plays out, a new bear market starts, guys. And I'm not happy to bring you that news, guys, but you know I'm going to be honest with you here on the channel. This doesn't look great. So we're going to be diving into that in today's video. This is a video that you're not going to want to miss. No one else is really talking about this on YouTube at the moment, and it is a very important part of technical analysis. You can bet your bottom dollar in a week from now, everybody's going to be talking about this. So guys, I'm not going to hold off much longer. We're going to dive right on into it. But before we do, if you do enjoy today's video, make sure you hit that like button. It really helps out the channel. Also helps the video to get ranked in the YouTube algorithm so that everybody can see the gospel of Bitcoin and get ready for these buying opportunities that we may be about to see. Also, make sure if you're new here to hit that subscribe button and the post notification bell, guys. We do Bitcoin and cryptocurrency technical analysis every single day. Also, guys, at the outset, I do want to remind you of the sale running on CT2A. There will be more information on that at the end of the video, and the $40 off coupon code to join our 900 students over here is in the description down below. Anyway, guys, without much further ado, I need to show you exactly what we're talking about. I'm not going to do one of those things where I make you wait until like 7 minutes into the video to show you what it is. It's pretty simple, and you guys have seen me talk about it here on the channel before. We're actually going to look at it on BLX because, guys, it's the 50 and the 200 daily simple moving averages. These moving averages, both of them, are very important. If you go back here into the history of Bitcoin, you will find that they are very crucial to understanding not only the bull and bear market cycles that Bitcoin follows, but also the smaller rally and decline cycles that Bitcoin follows during bull markets and bear markets themselves. As you guys can see, during a bull market, Bitcoin's always above this bottom moving average down here, that being the 200 daily simple moving average. When it's in a bear market, it's pretty much always below it. And during bull markets, guys, Bitcoin will oftentimes come down to the 50 right here. It'll fall below it, get back up above it, get support on the 50, and continue the rally. So as you guys can see, Bitcoin rallies, falls below the 50, back above the 50, support on the 50, and continues to rally. The same thing can be said for just about every single rally here in 2017. Right over here, we did the same thing. We fell below, got above, got support, rallied. Right over here, fell below, got above, got support, rallied. Exact same thing in September. Fell below, got above, got support, rallied. Both of these moving averages are very important technical indicators on their own, and when you put them together, they're actually a very good gauge of the health of the market, because when these two moving averages cross, you have what is known as a golden or a death cross. And if you guys are in the Cryptocurrency Technical Analysis Academy, that is an important enough concept that it warrants its own video in here. It's a 12-minute video talking about this concept. If you guys are in CT2A, I encourage you guys to go and watch this video again after this YouTube video is over, because golden and death crosses on the daily chart for Bitcoin don't happen that often. If we look back into the history here, I'm going to show you every single one that's ever happened, because there's that few of them. The first one that we saw was a death cross right here, where the 50 fell below the 200. When the shorter term moving average falls below the longer term moving average, that's called a death cross, and that normally happens at the beginning of a major decline or a major bear market. As we can see back in 2011, that's what happened. Bitcoin fell quite substantially following that, and then Bitcoin rallied. We had a golden cross right here, where the shorter term moving average broke above the longer term moving average, and from there, guys, for the next couple of years, Bitcoin went into a rally. We saw back over here from the beginning of 2012 all the way through 2012 into 2013, all the way through 2013, and then towards the end of 2013, when we topped out at $1,200, Bitcoin was in a bull market, and it was shown to be in a bull market because the shorter term moving average was above the longer term moving average. Now, skip forward, and what we have here in April of 2014 is a death cross. We saw this at the beginning of the bear market that you guys are starting to get more familiar with, that being the one over here, where Bitcoin rallied to $1,300 and pulled back. This death cross really confirmed the beginning of this bear market, the one before the 2018 bear market. Now, we also had a little bit of kind of noise over here. This wasn't very relevant. People probably thought this was the beginning of a new bull market. It wasn't. Bitcoin was to go lower, and then the same thing was true over here. This was a little bit of noise. In general, guys, Bitcoin will not do this. This has only happened twice in the history of Bitcoin where there's been a false signal, and both of these signals in general actually were still predicting something, just not quite the same way that they normally would. But as you can see here, the next major cross was right here at the very beginning of the bull market, about exactly 4 years ago in October of 2015. The shorter term moving average crossed above the longer term, and we had the bull market start into 2017. Before now, we've seen two more. We saw a bearish cross, a death cross here in 2018 that confirmed the beginning of the 2018 bear market, and we had a golden cross in 2019 that confirmed the beginning of this bull market. And that brings us up to today, guys, and the point of today's video. As I just showed you, these moving averages are important on their own. They're important independently, and when you put them together, you have a very strong indicator for when a bull market is starting and when a bear market is starting. And guys, there's bad news. Look at what these moving averages are doing. We've been in pullback for so long. We're 45% retraced from the yearly high. This 50 simple moving average is pulling back very close to the 200 simple moving average, and as you can see, they are going to be converging relatively soon. Let me just show you when the spooky day is. It's right over here. Guys, before Halloween, if Bitcoin doesn't have a major rally, there's more than likely going to be a death cross again. And as I've just shown you, the last several times that there's been a death cross in Bitcoin, it has been pretty bad for the market. Now, I don't want to overstate this, but I do want to show you, if we draw out these moving averages, something like what they're probably going to do here over the next couple of days, assuming nothing major happens before Halloween, which is this day right here, then Bitcoin is likely going to have a death cross. And if that does happen, guys, because every time a cross on these two moving averages happens, people start freaking out, there's probably going to be a crash. I've been doing technical analysis in the market through 2 of these. I started in the market way back over here over 2 years ago, and in that time, there's only been 2 crosses, right here and right here. And both times, everybody in the technical analysis space and on the YouTube space, everybody freaked out. Now, I do want to point this out, is that these don't necessarily indicate short-term price action. As we can see right here, there was a death cross and Bitcoin actually rallied. There was a golden cross over here and Bitcoin didn't start rallying until days later. But nevertheless, these still are very important moving averages on their own, and when they cross, it does mean something. And guys, also do keep in mind that we just recently had a death cross with the 20 EMA. If we take out the 50 here, then we can see that the 20 and the 200 really do the exact same thing. All these crosses are in exactly the same place as they were before. Literally every single one of them is in the exact same place if you use the 20 EMA instead of the 50 SMA, but we've already seen that bearish cross, which is predicting another cross because they always happen together. So guys, like I said, I'm not trying to spread FUD, I'm not trying to scare you, I'm not trying to make you leave the market, I'm not trying to get you all worked up. What I'm trying to do is I'm trying to show you what the market's probably going to do, because guys, it doesn't matter which direction the market goes, there is money to be made either way. The only time there is not money to be made in cryptocurrency is when Bitcoin is trading sideways, and what you do when Bitcoin is trading sideways is you go and you learn, so that when Bitcoin starts becoming more volatile, you can make more money. And guys, if Bitcoin is to crash below this neckline of this head and shoulders pattern we discussed in yesterday's video, if Bitcoin is to crash below 77.50 and start moving down towards a price target that I think is likely, like $7,200 that we've discussed in a recent video as well, that is just as much of an opportunity as Bitcoin bouncing from this level and heading to $14,000. Both of those are opportunities. You can short just as easily as you can long, guys. It's actually relatively rare for an exchange not to have margin trading nowadays. So it's more than likely that you're on an exchange that does allow you to short. And if you're not, it's not that hard to go and make an account on an exchange that'll allow you to short the market, even with leverage, if you know what you're doing and you're comfortable with the risks. So guys, yes, there is more than likely going to be a death cross. When these two moving averages get this close, it's very rare for them not to actually cross. Mark my words, you will see people talking about this as the next week and a half rolls around. Before November, there's more than likely going to be a cross, and everybody's going to be talking about it. I promise you that. I bet you Bitcoin that that's going to happen, because everybody always does. Anyway, guys, like I said, I'm not trying to spread FUD, but I do need you to understand the risks, and I do need you to understand the technical analysis so that you can then go ahead and implement that into your trading and make good, profitable, well-informed trades. Anyway, guys, tell me in the comment section down below what you think of golden and death crosses. I used to not think that they were that big of a deal. Back here when this cross happened, I was newer to technical analysis. I really didn't think it was that big of a deal, but it actually is. Crosses are very important, because if you look at the history of a technical indicator, then you will find that the more accurate that technical indicator has been in the past, the more likely it is to be accurate in the future. That's something we discuss in this video, how to spot a winning indicator and pattern in CT2A. We talk about in this video how to discern what is a winning pattern, what is a winning indicator, and what is not. And one of the ways you do that is by looking at the previous price history, the previous price action, the history of that indicator. The history of the indicator of the golden and the death cross is very, very solid. And every time one happens, it normally does mean something, like I said, even if it doesn't mean it on the short term. So tell me in the comments section down below what you think of that analysis. Do you think this is going to cause Bitcoin to fall? Do you think it's going to be disregarded? Do you think Bitcoin's going to rally for a couple of months, and then because of this cross, Bitcoin might fall after that? Or do you think that this is going to turn into one of these little fake outs, like this one that we saw in August of 2015, or this one that we saw in July of 2014? I'm interested to hear your opinions on that in the comment section down below. I'd love to get a conversation going, and I'd love to keep it going, so join the Discord server down below as well. Anyway, guys, that's pretty much going to wrap it up for today's video. video, I do want to remind you of the sale running on CT2A. Through the month of October, there will be a $40 off coupon code in the description to join CT2A. You can pay by card or PayPal. I had someone asking me that earlier. Yes, you can pay for the course in PayPal. You can also pay for it in Bitcoin. Shoot me an email, and I'm more than happy to accept payment that way. But guys, there are 900 people in the Academy, and they are loving every minute of it. If you don't believe me, go join the Discord server down below and talk to them. I want you to be informed on your decisions, whether that be with me or anyone else. It's important that you guys are making well-informed trades as well as well-informed purchases. So guys, go ahead and talk to our students down below before you join. I'd love for you to hear their take on the Academy. But anyway, guys, that is pretty much going to have to wrap it up for today's video. I do want to thank each and every single last one of you for watching as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.